morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday, the 12th day of December. Christmas right around the corner. I'll just let you know right now, after next week, the following week will be off Monday and Tuesday. We're going to repeat that the next week because that'll be New Year's. We'll be off Monday and Tuesday, but have no fear because allamericangold.com is open 24 hours a day, 7 days a week. Our toll-free number, 800-951-0592. Don't forget, follow us on YouTube and Rumble. Of course, Rumble hit with huge cyber attacks. You know, see, how long do we have? I don't know. All In just got banned. The amount of people, you know, Alex Jones just got unbanned on Twitter, but the amount of people that want to prevent information being out there, it just continues to grow. Yesterday on the Half Empty Cup, we talked about the COP28. That's the UN climate change, gathering, if you will, of nations. And Al Gore, one of the keynote speakers, was talking about, hey, we need to ban this stuff. We need to have the algorithms, and if they're not talking about what the mainstream media is talking about, we should prevent that information. And you know what was, and I'll give Gore a little credit, because he didn't say it was misinformation, because he knows. He didn't say that it was wrong information. He just simply said it isn't the information that we want the mainstream public to have access to. And Jason, I wonder how long until they'll decide, well, you know what, Joe and Jason, you know, they keep talking about these bankers, and you know what, that's just not good. Look at the dollar. The auctions yesterday, we had big auctions, and we had big auctions all week. They were, I'll say this, they were so-so. And what I mean by that, the early auction, the 3-year note auction was not good. Then we had a 10-year note auction. It appeared to be good because of the, well, hey, we had plenty of bidders, but the tail, yeah, they had bidders bidding way out of the money, which has been the problem. But, yeah, I wouldn't be surprised, Jason. Hey, we don't want people to know. We don't want them to know that the money in their bank account is not owned by them. That still freaks people out. You know, when people hear that don't know it, oh, my gosh, they freak out. It's been the law. You know what? That's been the banking law since way before America was a country. That's how long that's been a law. And when you explain to people simply, well, let me ask you this. Do you think the bank could loan out money that wasn't theirs? And people, they look at you funny because you got to remember, that's what the banks are loaning out the money. You think that the law is set up that they can loan out money that's not theirs? No. We are merely unsecured creditors to the bank, and guess what? They set that system up on purpose, and we're going to find out. Unfortunately, that's how I feel, but we're going to find out pretty soon exactly what that means, Jason.
Yeah, and I've been observing that it seems like people are gravitating towards money more and more than I've ever seen, especially since I've been on the radio. And with Al Gore making these statements, you know, you made that yeah, hey, what happens if they suddenly don't want Joe and Jason on the radio? And, well, yeah, if we're upsetting the money, and the money is absolutely dictating a little bit of what Al Gore's saying, and it seems like everybody now is the money seems to be dictating the choices. So it's a strange world we live in, Joe, and I know Al Gore would love to silence any show that punishes those that finance his agenda.
Didn't he invent the internet?
Yeah,
right? Didn't he invent it? I mean, he said he did. I don't know, right? You know, maybe he's the guy behind Bitcoin, too.
Maybe he believes he's the next Edison. 100 years from now, he'll just get the credit because he said it so much. I mean, you know what? Stranger things. Hey, I'd love to hear 200 years from now when they talk about the internet, and I bet the name Al Gore pops up.
You know what? You're probably right. Somewhere along the line, right? It'll be somewhere in folklore, Al Gore and the internet. Why not? And I was talking about Bitcoin. Man, first it was Jamie Dimon saying, hey, we should just get rid of it. It should be banned. I hate it. Elizabeth Warren now. Listen, I'm going to say this, and we knew it was coming, didn't we? Congress now, along with the Treasury, I told Janet Yellen is an evil woman. Evil if you believe in freedom and if you believe in privacy. She is absolutely evil in those regards. They're getting ready, Jason, to pass all these laws to make sure that everybody is known. No more. You can't do this privately because. And again, it's the same thing. Well, you know what? You're drug dealers, you're terrorists, you're pedophiles, right? You name it. You must be it. We have to know who you are.
Not only do they want to know who you are, they want to know everything about what you're doing, what you used to do, whatever you spoke ever on any kind of digital platform. Hey, all your emails, all your texts, all that stuff. And therefore, if you've made one slip up or one little mistake and you need to be the bad guy, then they got you, right, Joe? Because a lot of, like I just said, people are gravitating to the money. And if you're in a position that you're weak financially, you're much more controllable against people like this.
When we get back, we're going to talk about CPI, the good, the bad, and the ugly. Oh, yeah. And also, what's going on with electric vehicles? Did the consumer just stop buying them? We got that and more, all coming up next. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. A quick look in at the markets. The Dow is up 100 points, 96 points, 36,500. The S&P's up 4,600. The NASDAQ's up 30. Gold's up 5. We'll get to gold a little bit here, a little later here is the bottom in. We'll talk about that. Remember, we got the Fed tomorrow. Silver's up 4 cents. The dollar heading lower today. And everybody, and I mean everybody, seems like in the last 12 to 18 hours, reiterating rate cuts, get ready, recession and whatnot. It's going to be, 2024 is going to be a crazy year. The presidential election, I still think it's going to be Trump and Biden. It's going to be, I think it's going to be wild. But here's the thing. Put all that drama aside. Put it aside. Forget it all. Right? Because the markets, right, they trade up, they trade down, they trade up, they trade. We've been going up and down in this range here in the markets for like 3 years now. Kind of gets towards the top where it kind of is now, falls back down, then goes lower, then comes back up, all on hopes, dreams, make-believe. The realities are simple. We have reached the tipping point when it comes to debt, period. When I'm talking about every single week, the auctions suck. What am I talking about? The auctions. The Treasury auctions. Every day we got to sell all this debt. Every day a bunch of that debt rolls off. Now you're going to have years now where, hey, in addition to the $2, $3, $4 trillion that we're going to add to the debt, you got all the debt that rolls over, right? And these numbers are getting huge. I mean, it used to be $1 trillion, 500 billion, 2 trillion, then you got the 3 trillion. Jason, we're talking 8, 10, 12, 15 trillion. These are what's coming over the next handful of years on top of all the other stuff. Like I said, that we're doing year in and year out. It's why I keep telling people two things you don't want. You don't want to have money in your bank that you don't need. The other thing is you better be diversified on Wall Street, right? Having other investments besides just your 401k or IRA that's all in on Wall Street. Listen, we had glory years. We really did. Even all those boom and bust cycles of the last 40 years, that was the glory time. Because nobody really thought that they would have to pay it off, Jason.
I don't think anyone in Washington, D.C. ever plans on paying it off. I think it's been decades past before, since anyone really believes paying it off. Maybe some people in the 90s, some idealists
it
in the 90s,
ended in the 90s, right? Yep, yeah. It ended in the 90s.
So, and to compare, for the average person who has a credit card, I mean, it's really twisted because we're going to be paying over $1 trillion just on the interest on the debt. This is why it grows. When you have a credit card, even if you make what's called the minimum payment, a little tiny bit of that's going towards the principal, so that the next month's payment, if you don't put anything on there, it'll slowly but surely it'll go down. The federal government puts zero towards the principal. They're not supposed to pay the principal. This is a scam against the American public. They never want the principal paid. We always are supposed to have debt. So you start to think, well, how does this even work? Well, think about you open a credit card and you're working at McDonald's. They're only going to give you so much credit, and you're paying interest, minimum payments on this credit card, except for in this case, you don't have to pay principal. But if you get a better job, you become the manager. You'll get more credit. You service more interest on your debt. Then you become, a sports star. You make $1 million, right? Increase the credit. You can keep on, as you get richer and richer, you can keep increasing that credit, right, Joe? The debt can just get bigger and bigger. Pretty soon, can you imagine if Elon Musk had a credit card, Joe? What the balance would be and how much interest he could pay without paying back the principal. If it ran like the federal government, it could be a massive amount. Well, the federal government, in conjunction with the Federal Reserve, is allowed to do this. And then the bigger that principal or the interest payment versus the debt grows, Joe, the bigger the debt, the overall debt's going to be. So hold on to your hats, 40 trillion, 50 trillion, up to 80 trillion. That's going to be here in about a decade, Joe.
I'm going to make it really simple. They had interest rates at zero for 15 years. They did. They took the debt from $5 trillion to $30 trillion. It's now $34 trillion. And let's not forget $8 more trillion from the Fed. So really, they took it from $5 trillion to over $40 trillion at zero. Zero's gone. So not only do we not pay off any principal, right, but now the amount of interest that has to be paid is overwhelming. At the same time, the central bank is cutting down the money supply. This is not going to end well, and here's the problem. How does all these boom and bust cycles end? With them spending a ton of money. This is the problem now. They spent so much money. We lived in make-believe for the last 15 years, period. The financial crisis, every single financial institution, with the exception of a very few, were completely insolvent. They were all going under. And what did they do? They just created debt at proportions the world has never seen. Now the fact that we've got to pay the interest on the debt, it's right. It's the coffin. It's the proverbial nail in the coffin. The easy stuff. What does well in easy debt cycles? Stocks. Stocks do well. Bonds were fantastic. I mean, they went to zero. I mean, right? If you had anything that was 6, 7, 8% in the early 2000s in a bond, man, you did great. Of course, now what's happened, right? Bonds not so good. Wall Street's next. I'm telling you. This is why we keep talking about you got to have your gold and silver put away. This is why we talk about having your money at Northwestern Mutual. check out why refi. It's not correlated to the stock market, and look at the rates of return. You already know you get up to 10.25%. You already know that. But now they made it even better. If you want to do it, let me do it. You know what? I agree with Joe and Jason. 2024 looks like I don't know what's going to happen. I just don't know. If you called Y refi, you got more than 50,000, you called Y refi, they'll give you 6.5% fixed. Won't change. 6.5%. And for a lot of people, they're like, you know what? I think I'll take 6. And now, could it be possible, right? Could Wall Street go up 10% next year, 15%? Sure it could. Right? Could it go down 10? Could it go down 20? Sure it can. But you can lock in at 6.5%. That's actually better than, and they did it for 2 years, 3 years, 4 years. They pay you more, and then get this. You know all of these like annuities. They have you got to have the money there for X amount of years. And if you want your money back early, they whack the daylights out of you. Why refi doesn't do? They never did that. You get all of your principal back. Now they said, you know what, we want to make it even better. We're going to give you some of that interest back as well, even if you have to leave early. And the closer you are to maturity date, the more of the interest they're going to allow you to keep. Check them out, investyrefi.com, or just make it easy. Just call them, 888 Y-REFI24. Remember, you got to have a minimum of 50,000. You can use an existing IRA. You can use money in your bank account. You can use money in your E-Trade accounts, whatever you want. Some of you can even use money in your 401ks. 888-Y-REFI24. Now, let's get down to it. CPI, this was the big number today. Tomorrow, we get the Fed announcement. Everyone knows what it's going to be. The Fed's going to do nothing tomorrow. It's all going to be about what Jay Powell says afterwards. But let's look at CPI today. It didn't go down. The headline number, they were expecting the number month over month to be flat, so no movement. It was up 1/10. Not bad. Up 1/10. The year over year, it went from 3.2 to 3.1. So the headline year over year number, 3.1%. Okay, now the Fed says they want, 2% is the target. If they admit to 3, we know it's at least 6. But it's 3.1. So lower. Okay, people feel good about that, right? We can get back into the Fed's going to cut rates. The core. Now, this used to be the Fed's favorite number. So the farther away you get from headline, the farther away you actually get from inflation to begin with. The core rose modestly month over month, up 0.3. So obviously that's worse than 1/10. Right, 0.3 month over month, a little hotter than they were expecting. Core CPI year over year was flat at 4%, so double what they want it to be. But remember, that's not their favorite number anymore. No, it's called the super core. The super core, their new favorite number, because it takes out shelter. Right? Hey, let's take out the most of now already the core. They take out food, they take out energy, super core, let's take out shelter. So, again, I always laugh at why they care about this number. So you're saying, wait a minute, let's not count food, let's not count energy, and let's not count shelter. So, and I've said this the last few times, this is inflation for homeless people. Okay, so if you are homeless, this is your inflation number. By the way, this is the Fed's favorite inflation number. It rose 0.5%. Whoops. That wasn't supposed to happen. 4.1. was the year-over-year number. That put, remember, Supercore was below 4% last month, Jason, above 4% this month. Transportation, used cars, and car insurance, they were higher. By the way, if you want to talk about shelter still rising. 28 straight months of shelter inflation. The good news, though, Jason, it's slowing. The pace of shelter is slowing 6.5% year over year. Last year it was 6.72. You add them together, right? Inflation numbers skyrocketing. Rent inflation was also slowing, but it's worse. So it's down to 6.9. It was 7.2. But again, not enough here. So what does this mean for tomorrow? Absolutely nothing. The Jay Powell, they're going to keep watching the data. They're going to say we're prepared to do whatever it takes. They won't. I don't think they're going to rule out a rate hike. But let's face it. I think most people all agree if there's the next move from the Fed is going to be lower. We'll be back after the break. 800-951-0592. Now we got inflation out of the way. It wasn't Goldilocks, right? It wasn't quite Goldilocks. It wasn't bad, right? 4% on the core numbers. Headline down to 3.1. This, again, I think leaves us right where we've been at, which is the Fed's not hiking. They're not saying they're raising. They're not saying they're cutting. Everybody says they're cutting. Everybody's saying it. I know that's what Wall Street wants. I don't know. I'm not there. I think they're right. But what about gold right now? Is gold at the bottom? So yesterday, 1975, 1980 level. That is support here for gold. Remember, that's where gold would get, and then they would sell it off. Remember, gold almost get to 2,000, then they'd sell it off. Now, this is if this holds, and what we got to wait for tomorrow, this will be a much higher high from the low that we went to. Remember, the gold, it was almost broke 1,800. So this will be a considerably higher high here. Obviously, it would have been better. All of us would have loved it if it would have stayed above 2,000. I think it'll depend on Jay Powell tomorrow. But here's the thing. There's not going to be a rate hike. I think that Jay Powell is going to say what he's been saying for the last 12 to 18 weeks now. And it's always hard on a Fed meeting, but it could be a really good opportunity. It's almost impossible. I've been doing this 20 years. Catching bottoms and catching tops, it's just luck, really. I mean, it's very hard to do, but if you want to dip your toe in, this is a great place to do it because I think after this week, I think what we're going to see is a big-time softening coming next because we got to talk about electric vehicles. We got to talk about Hasbro. We got to talk about the retailers and Christmas. This is kind of the last, I think, grasp here of spooky numbers, at least for the rest of the year as we getting ready for the Christmas holiday. We got the $20 gold piece. It's the best deal in town. We ran them yesterday. We're going to run them again today. 1 through 19, 22, 25. You're saving $50. And gold's up today. Buy 20 or more. $2,200 at 800-951-0592. 0592. And like yesterday, if one of you wants to buy 50, I can do that for one person and one person only. There's just not enough to do more than that, but it's a really, really good opportunity. Buying it at $200, $200 less than what 10 days ago. It's a good opportunity at 800-951-0592. Let's start with Hasbro. Okay, Hasbro, the toy company. You think, man, okay, Christmas time, they bulked up hiring. Well, they've made the toys already. This is what I'm worried about after Christmas. Hasbro said holiday spending not looking good, not performing, even though online traffic is a record, foot traffic continuing to decline. Hasbro says sales have been outright horrible, told the Wall Street Journal it's going to lay off 20% of its staff, over 1,100 people. So, Jason, a pretty big axe being swung by Hasbro saying, hey, it's just not there, the consumer's not there, and laying off 20% of staff. Yesterday we talked about Lululemon, who's one of the stellar performers. It looks like retail is going to be a struggle this year, at least this holiday season and heading into next year.
How many years has it been since Toys R Us was gone? They laid off all those people. Now, I know that's not a toy-making company. It was the company that sold the Hasbro toys.
Right.
And when that went away, was it going to be very long before Hasbro was going to see some problems? You need outlets to sell. I know that I know everybody loves to go to the internet and buy, but there is still a tremendous amount of people that go to stores and buy. And when the outlets go away, like Toys R Us, the last of the big toy stores, doesn't surprise me that the toy makers are going to slowly have troubles, because you got to have your guy in the street selling it, right?
As a former district manager in retail, I can tell you, online's great. It's great. Here's the problem. You don't put the extra stuff in your cart. Because when you're walking through, you're walking through Walmart or Target or Kroger or wherever, the mall, you're at the mall, you're window shopping. And you're adding, I don't need it, but I'm going to, you know what, that's a good price. I'm going to put it in my cart, right?
And there's not a digital number telling you. There's no digital number telling you where you're at every time you click. They actually kill themselves on the plus selling, because the little digital number's telling you every time you check the cart, oh, you know what, I'm going to put a couple things back. There's a little peer pressure when you got the cart all full. It's like, wait a minute, I don't know if I want to spend this much. Let's just go put the stuff back on. It's kind of embarrassing to put the stuff back on the shelves, right? There's a little peer pressure there. You got to have retail sales. You got to have the store. It's just
you got to have. Listen, the retailers need it. It's going to be very, very interesting. That's why I said I don't know about tomorrow. We'll see how it plays out. But we're about done here. This correction, and really it's a paper correction. I think it's about over. Jump on it. Let's talk about what Ford said today. All this electric vehicle nonsense. Listen, I got tons of friends that have one. Most of them are Teslas. They all say the same thing. They like them. Oh, yeah, I love it. You know what they all also say? And they've been saying it. The longer they have it, the more they say it. Yeah, it's really good if I'm just, doing something in town. I won't take it. Heck, they won't even take it to Sedona. They won't drive it to Flag. They won't go they don't even try to go out of town. And then, of course, the longer they have it, you know what's funny? The less charge the battery has. And they still love them. Don't get me wrong. But they're like, hey, you know what? Even if I got to go all the way across town, I'm not taking my Tesla. Ford. They're saying sales of their electric truck have stopped. I'll tell you about it, what they're going to do about it. That's coming up next. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday. Big news out of Ford, saying that they have to adjust their production of their electric vehicles. Now, I think of an adjustment, like a little tweak. Okay, just not adjust it, just a little bit. Well, Ford says we need to delay $12 billion in investments due to softening demand for their premium electric vehicles in a memo to suppliers. Here's that axe swinging we keep talking about. They said that they have plans beginning in January to produce an average of 1,600 electric vehicles a week. Okay, and I'm like, okay, all right. Were they going to, do 1,800? Maybe 1,900, $2,000? What kind of an adjustment are we talking about? Well, they were planning, Jason, on producing 3,200 electric vehicles a week. So I know a lot of us went to public school. I had to use my fingers and my toes. Half. They're now saying, hey, guess what? Think about it. It's December 12th. Hey, starting right after New Year's. This is how long we waited. We waited to the last possible second. We need to cut production by 50%. And I'm just thinking, how many layoffs is that going to be?
Yeah, there's a lot of problems with electric vehicles. I know that they're really going to push hard for the majority of the Western world to be driving these things, but I think it's a lot more about cheerleading than it is about practically getting it done. And, I don't doubt they're going to have a lot of success over the long term, Joe. But the economy sucks. That's no good for them. They're already government subsidized, so that doesn't work. Lithium is running short. Silver's running short. Cobalt's running short. So these things that are needed for the electric cars aren't working. And you got the BRICS nations saying, hey, we need to go heavy oil and commodities. That doesn't necessarily help, maybe in the lithium area, but it's not really going to help when it comes to gas-powered cars running off oil, coming out of the ground. There's a fight there. So, there's a lot against it, Joe. It's, I can imagine people that love their horse and buggy looking at these newfangled cars coming in and nobody wanted to use them. Well, no matter how much Henry Ford wanted everyone to drive a car, and he was cranking them out faster than almost any car in history, it still took a while, didn't it, Joe? It takes a while for that to come in. And you can't just force it onto people because it will definitely malfunction greatly if you force it, Joe. And that's kind of what's happening. They're trying to force it on us. And if you're going to, take a bunch of workers back and produce only half the cars, that's a direct result of showing that it's failing, Joe.
Yeah, and again, I'm sitting here, and the answer is really simple. The base model, like the Lightning truck, 60,000. You want stuff, you want a few bells and whistles, right? I want a couple bells and whistles, right? 75,000, right? Well, I want the Mac Daddy. Oh, that's 120,000. I think it's pretty obvious what the issue is. And again, remember, interest rates aren't zero, right? There's no 0% car loans, 2% car loans. And again, here's the thing, though. Let's not forget about this part. How about all the suppliers now? Yesterday, right? Yesterday, okay, we're going to make 3,200 electric vehicles a week, right? They've already started making the stuff. Whatever they make for the Lightning, they've already started. How many people are they going to lay off? Ford alone is saying, listen, we're going to spend $12 billion less dollars in 2024 than we planned to spend. This is just another one of these indicators. Hasbro's an indicator. Ford's an indicator. It's going to be very interesting what happens after Christmas. How many companies, because we didn't do a lot, there wasn't a lot of retail hiring outside of Amazon, right? UPS, FedEx, outside of them, there wasn't a lot of extra hiring. How many people that was, hey, I wasn't seasonal help. I worked here. I was working here last year. I was working here the year before. I worked here all summer and all fall. How many of those will say don't think they were seasonal workers are going to be on the chopping block coming into January? It's going to be interesting to see, because I think that is why a lot of people are saying 2024 is going to look and feel a lot different.
Yeah, Joe, and it's very likely Ford already has maybe a couple of warehouses more full of the parts necessary for the cars to be built, and they just aren't selling. You know, it's what it really comes down to is sales. They're not going to cut the production if they got the sales. And why do I get the feeling they've ordered ahead? Like a lot of companies, a lot of people looking at the inflation. Hey, if you can order ahead, you know, I know that they try to make the new model look a little sleeker, cooler, and but you know, with the economy going the way it's going, they'll probably keep the model looking the same for a couple of years. And they probably got all the parts for the 2025s, the 2026s, and if they're full up and they're not selling them, you're right, Joe. Cars are like a small version of housing. When the cars stop being built, all of the manufacturers that help supply making that car, they're all going to suffer with Ford.
800-951-0592. Jason and I going to wrap it up right after the break. 800-951-0592. Joe and Jason wrapping up a Tuesday. Remember, we got the Fed tomorrow, but right now gold's up 1981. Silver's unchanged at 2275. And again, I think we're kind of at the end of this correction here. We may get some more tomorrow. We'll see. But I think after this week, I think the data, we're going to get more data, unfortunately, like Hasbro, more data like Ford, that the slowdown, we've been talking about it is definitely here. I've had so many people talk about, hey, I was out, Saturday or Sunday. Traffic wasn't bad. Thought it was going to be a mess out at the stores. It wasn't. Right? It was fine. It was like normal. These aren't things that you want to see. I think take advantage here of the pricing. Take advantage of the pullback. $20 gold pieces. These are the old ones. You know why we like them. The most private way to own gold. Who doesn't want to be private? Buy, sell, and trade without having to give out your driver's license, your social security number, no mandatory 1099s. 1 through 19, 22, 25. 20 or more, 2,200. And the girls during the break said, come on, 50 or more, Joe, incentivize that. Help them out. Okay, fine. I only can do one. One person out there. If you want to buy 50, 2175, 800 951 0592. Keep adding to the portfolio. I tell you what, I'm afraid, excited, anxious, and nervous, all wrapped into one. 2024, I think, is going to be complete nuts. People are going to be freaking out. We've got the election going, right? Is a recession coming? Are rates heading lower? Are we going to have more problems in the debt? How low is crude oil going to go? That's another sign. Crude oil is back in the 60s again. The demand just doesn't seem to be there.
Yeah, there's a lot of people. I've been saying this since 2021, essentially, Joe, but especially last year, 2022, and then this year. People are running out of money. Every factor that we've mentioned for the last 2 years, credit card debt, highest ever, just all consumer debt, highest ever levels. The federal government, highest interest paid on the debt ever. Everyone's running out of money. People are, obviously there's people doing better than others. It's not the case for everybody. I guess it's a blanket statement, but generally as a society in this country, Joe, people don't have the money to be buying $60,000 electric Fords, right? They just don't.
Yeah, well,
they don't have it.
You talk credit card, the interest rate so much higher.
It's high. Yep.
I mean, well over 20%. I think they're saying like the average interest rate on credit cards now over 25%, and people with the bad credit over 30%. It's insane. It really, really is. And this is kind of the problem with debt in general, and why we're real cautious here. And remember, Wall Street's a debt market. They've had 15 years of easy times. I just don't think it's going to be that simple where the Fed tries to shrink the money supply and all. It's hard to imagine things get better in 2024. How's that? Will they get worse? We'll see. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.